saving makes economic growth possible.
The financial system consists of savers, financial intermediaries, borrowers, and financial assets. Basically, the way it works is savers puts money in a financial intermediary, and then borrowers borrow that money. When the savers place the money in the financial intermediary, they receive financial assets. For example,
I have a lot of money, but I don't know what I can do with it.
Well, you can save it in a financial intermediary, like me.
Here you go.
Here's your financial asset.
Thank you.
I have no money, but I have so many good ideas.
Well, you can borrow some from a financial intermediary like me.
Oh, really?
Yeah.
All right. Thank you.
There you go.
Time to start my own company now, and you guys will grow from it.
Yes.
Another important group of financial intermediaries are non-bank financial intermediaries. These include finance companies, life insurance companies, pension funds, mutual funds, and real estate investment trusts. A mutual fund is a company that sells stocks in itself to individual investors and then invests the money it receives in stocks and bonds issued by other corporations.
One major financial institution that does not get its funds through deposits is the life insurance company, which is also a non-financial intermediary.
I really should do better in the stock market game. I should remember the 4 factors before investing in financial assets. Number 1, the relationship between risk and return. Are my risks worth the money that they're going to make? Second one, my personal goals. Do I want to make money or do I want safe stocks that'll last a long time? Next, consistency. Keeping the same stocks for a long period of time. And finally, avoiding complexity, sticking to stocks that I know about. When an agency needs to borrow funds, it is issued bonds, like this. Bonds are a long-term obligation that pay a stated rate of interest for a specified period of time. Hello, I'd like to buy a bond.
alright, sure, the par value of this bond is $200.
Here you go.
Thank you.
Hello, I'd like to sell this bond.
Okay, actually, I'm sorry, the maturity of this bond is 20 years. It's only been 10 years since you bought it. You'll have to come back in another 10 years before I can buy it back.
Okay. Hello, I'm back to sell this bond.
Okay, the coupon of this bond puts its value now at $300. So, here is $300. Thank you.
Thank you.
Go.
Modern investors have a wide range of financial assets to choose from.
These financial assets include certificates of deposit, corporate bonds, municipal bonds, government savings bonds, and international bonds.
Tell me more, what else?
Well, there's also money market mutual funds, treasury notes, and bonds, treasury bills, and individual retirement accounts.
It's awesome.
It
Thanks
sure
for
is.
enlightening me. Come in.
Hi,
Hi.
I'd like to buy a bond that lasts 5 years.
Oh, I'm sorry. Bonds last anywhere from 10 to 30 years. I think you're looking for a treasury note. Those last anywhere from 2 to 10 years.
Okay.
The 4 different types of markets are money markets, primary markets, secondary markets, and capital markets. It is important to know that capital markets is a market where money is loaned for periods of more than 1 year.
Hello, I'm part of the American Stock Exchange.
Hello, I'm part of a regional stock exchange located in Philadelphia.
Hello, I'm part of the largest and most prestigious security exchange, the New York Stock Exchange. Although we have shown you the importance of organized stock exchanges, there are also many over-the-counter markets. Members of over-the-counter markets belong to NASDAQ. Look at these reports. The Dow Jones and Standard & Poor's have all crashed. I might as well just fling myself off this roof because the stocks are doing so terribly.